Hello everyone, welcome to the ichimokucharts.com weekly analysis for the S&P 500 for Friday, July the 15th, 2011. Well, a change of trend this week. We have a candle that's made a lower high and a lower low. Previous week's trading we had a spinning top type candle. It's a candle of indecision, and we can see the downside price rejection as shown by the shadow on the top of the body of the candle, and the upside price rejection as shown by the shadow on the bottom of the candle. So this is a candle that's indecisive because the buyers have lost commitment, but the sellers have lost commitment at the same time. It's a little wonder we had a change of trend. We've had confirmation of that change of trend, market making a lower high and a lower low. Fairly large red-bodied candle, and that denotes the sellers making net bearish progress. Small shadow on the bottom of this candle as the market interacted with the support at 1313. That support extends down to the round number 1300, and that is a very big number, as we've seen with the daily charts. If the market is going to interact with that, it's an area where we should see the market find some solid support. If we do see a bearish breakout down below there, we should see the market trading to lower levels, certainly down to the support down around 1258 or 1249. There's some important support levels where the market has held up previously, and we saw the buyers come in. Now, in terms of this pattern that we can see here, we have a very strong prior uptrend, and we have a symmetrical triangle forming. So that could be significant for this market. The market is certainly congesting. We're losing the trending action that we've seen previously, and we have quite a volatile area here, with a long way between the peaks and troughs in this symmetrical triangle. Usually symmetrical triangles are continuation patterns, and that's usually when they're quite small. They tend to be quite small, so this doesn't really conform to the usual type of symmetrical triangle, and that does suggest that there is a possibility that it could be a reversal pattern. They can be reversal patterns or continuation patterns, more likely continuation, but they can break out either way. So we do need to be on the lookout for a bearish breakout down below the boundaries of the pattern, as we've marked here with the blue and the higher boundary in the blue at the top here. Having said that, however, we could still have a breakout to the upside, and with the market continuing on with this continuation pattern. So if we do see a bullish close up above the top of this boundary, we could see the market trade to much higher levels. Now, in Ichimoku charts terms, the market is trading up above the cloud, so the market is retaining its overall bias, and the market broke out quite some time ago. So it's a little wonder to see the market having a bit of a rest and congesting, because we did have a fairly strong prior uptrend previous to this when the market broke out. Having said that, however, the market is not as bullish in the lower time frames, so we can see that the market's trading very close to the Kijun Sen and Tenkan Sen. That's the pink line and the green line here, the two Ichimoku indicators. So that tells us technically the market is just bullish in the medium term and fast term time frames, but the market is so close to those indicators that it's basically neutral. If we do see a breakout down below those indicators, then we will have a market that's bearish in the medium term and fast term time frames. So basically a market that's still bullish, considering that we have a market that's trading above the cloud, then that perhaps does add some weight to the breakout of the triangle being to the upside. But really we do need to be patient and wait for this congestion pattern to resolve itself with either a breakout to the upside or to the downside.